What is going on, my friends, and welcome back to another video on the channel. Well, in today's video, we are going over the entire crypto market, but really focusing in on Bitcoin, as I am expecting a very big move to happen over the next about couple days to even up to the next week. We are currently sitting in a very obvious range, and whichever one of these areas we close above or below first, I think has a major deciding factor on where we can expect the price of cryptos to go in the short to even midterm. So looking at this range, of course, what we know is that we have very obviously established a rejective high sitting around $44,800. Now, this was no surprise. Of course, as we were in, within this downtrend, we were putting in multiple macro highs, the last one being around 44,800. And so it's no surprise to us that as we did see some recovery, that this would be the level in which we would start to have to really work to get back above. Now, don't get me wrong, we did see the wicks above this level, so that window or that door has a little crack in it. There is the ability for us to get back up here, but at this point on a daily closing basis, we have not been able to clear this rejective high, which obviously makes that our goal. Our goal right now is to get back above that rejective high at $44,800. The issue is at this point, though, is that we are at the moment starting to see some pretty strong levels of red in the market, of course, with Bitcoin down 4%. We're seeing something like ETH down 4%, DOT down 5%, and multiple other alts down 5 to 8%. And that tells us that there is the possibility of us seeing a larger pushback to the downside before being able to make our way back up to these levels, and kind of invalidating the possibility of this being the inverse head and shoulders that we hoped it would. Because, of course, the whole game plan in which we had over the last couple of days was let's establish this, let's go left shoulder there, right? Let's go head here, boom, and then let's put in this right shoulder, very similar closing levels as here, right shoulder, and we need to get back above the rejective high, but we're not doing so. And since that is not happening, and since that trade setup is not coming to fruition at the moment, we need to start to pay attention to where this thing may go to the downside at this point if we start to lose this key level of support. So in the event in which we hold this level of support, let's go ahead and start with that. We still need to get back above the rejective high at 44,000. Let's say we need to close at 45,000 or above. In that event, I will actually be doing some buying, in which I will update you all on, of course, with, the Patreon members, and then I will put it on my YouTube channel. But if we are incapable of doing so, and we start to lose this ascending level of support, with our most recent, macro support being around $41,600, we can expect that there will likely be a pushback towards 40, if not as low as $37,000. So let's talk about why both of those could happen and how we can go about it. Now, in the event in which we again do lose this ascending level of support, I am going to start to expect again that we will see that fall to the downside, right? We have then put in something of a more regional macro low, and then we can expect that, we're putting in a B, C correction back towards the downside, somewhere around this level or somewhere around this level here. Now, is this a bad thing? Let's start with, is this a bad thing? And then let's talk about why these levels are of significance. Well, realistically, no, I don't think this is a bad thing. The reason that I don't think that this is a bad thing is because of the fact that we need to see our indicators realistically on the daily perspective see that reset. Now, many of you do know we have been stuck within this, downward sloping trend line, this downward sloping level of resistance for a very long time. I mean, we were under it for months. Now, in order to break back above it, it was going to require strength, and it was going to require a large effort from the bulls, of course. And as we didn't make that large effort to get back above the trend line, we can see that it did overextend the majority of our indicators. We started to see this very strong drive of bearish divergence here on the price as we started to set, some of these, let's go from here, lower highs, but realistically setting higher highs on the RSI. That's a case of bearish divergence in which seeing that the RSI is extending much further than the price, meaning that it will run out of steam much sooner than we would be able to, maybe even recapture some of these previous highs. That says that we needed to see a reset. We needed to see this either pull back or consolidate in order to open up some of this room for us to see growth to the upside. Even if we look at something like our Bollinger Bands, we did get extended into the top side of our Bollinger Bands, which is typically going to be a point in which we will see a more short-term correction back to the downside. So, of course, considering the fact that it took so much strength and so much extension to get us out from this trend line, it is no surprise at this point that we may be looking at the price coming back down and establishing some type of support on some of these lower levels, allowing these indicators to reset, and then looking to set the new higher low and continue back to the top side, okay? So what that means for us is we need to start to identify where these key levels of support could be in the event in which we do fall below this point. Now, I know some of you are going to say, well, does that mean you are saying it can go up or it can can go down. And I like to make fun of you in every one of these videos, and I will continue to do so. And yes, that's exactly what I'm saying. None of us can predict the future, but we can prepare for each outcome. And so what I'm doing to prepare for the outcome of which we fall below this ascending level of support is I'm going to be prepared for, first off, us to visit this more regional macro low sitting right around $39,700. So the reason that I'm going to be going with that one is because that is the last point in which we can realistically say we have some type of inverse head and shoulders, which is a strong bullish pattern. That's the lowest point in which we put in this left shoulder here. And if we can bounce right off that level, there's an argument to be made that this is still in play on some type of compound extended right shoulder here. Now, in the event in which we do come back down to lose $39,700, I am expecting us to start to push back down towards $37,000 to $35,000 on a more macro Fibonacci retracement. Do remember, as we set these swing low to swing high events, this is the minimum level of support. This is where we will very likely retrace to if short-term levels of support are lost, and we absolutely must see this point hold. If we see 37,000 to 35,000 fail, there's a very strong chance of us putting in, an equal low to this $32,900 low that we put in here. And there is even a very strong chance of us continuing back to the downside to see more of a continuative fall and, in continuation of the downtrend in which we had been in. And so for all of those reasons, I am paying extremely, extremely close attention to where this daily close does come. If we do a daily close and put it in below $41,600, do expect to push back down towards $40,000 to $39,700 to retest that macro low. From there, again, if we blitz through that one, we are aiming towards $37,000 to even as low as $35,000, and that is where we absolutely need to find some support. Now, what's beautiful is that even in the event in which we do see a push as low as these levels, we will then very likely have seen a full reset on our RSI and many of our other daily indicators, which at that point would tell us, okay, very likely, very, very strong likelihood at that point that we do establish some type of higher low here, and then we really start to look for that stronger drive back to the upside to chase, $50,000 to even $52,000. So overall, things are looking okay. Although there might be a bit of a short-term crash incoming, the indicators do say that there is a strong chance of us finding some support to the downside, right? We look at our bottom side Bollinger Band right now, it is sitting within our support level, meaning that at this point, if we are going to extend to the downside, our extension would still be within the higher low range, in which we again put in the higher low and continue back to the top side. So overall, if this does happen, worst case scenario, we do see a fall of, possibly somewhere of around 12 to 14%, which could look like some pretty extensive 20+% losses in our alts, but realistically that could be beneficial for the long term, and it definitely could provide us with the ability to reset our indicators to open up enough space and room for a larger continuation back to the upside. But do remember, none of this matters as long as we are above this ascending level of support. And if we do bounce here and we do work our way back above $44,800, we are then aiming towards $50,000, maybe even as high as $52,000. And that is when I will start to do a little bit of accumulating with the expectancy of some growth. So overall, that's the outcomes, and that's the, what I'm seeing from the charts right now. My goal here is to not tell you what's going to happen in the future, but prepare you for what is very likely to happen within the realm of possibilities based off of structural technical analysis mixed in with our indicator analysis. And you should also not forget whatsoever that if you are going to be doing buying in crypto and selling it eventually for some gains, if you are going to be holding for the long term, there is absolutely no point in you losing up to 40% on every single dollar that you make due to taxes. I think it's absolutely ridiculous, and for that reason, I did partner up, as you guys know, with iTrust Capital. I'd highly recommend you all at least just open a free account and verify the email that they send you, and then you can see a lot of the options which they offer on how you can save, again, up to 40%. I don't think you guys realize how much 40% can be on $100,000 of gains. It's absolutely ridiculous. So go ahead, go check out your options there. Again, open an account, enter in this very, very basic information. They'll send you an email, verify your email, and then go from there, see what your options are, and at minimum, just give it a try. I guarantee it will be worth it to the majority of you, especially for those of you who are holding long term. But with that being said, that is going to be about it for today's video, and of course, I hope you guys did enjoy. If you did enjoy, of course, you can always let me know simply by smashing that like button so more people do see this video, and subscribing to the channel if you do want to join our community. I do post all of my trades and my updates over in the Patreon if you do want to go check it out, but if not, I will see you all extremely soon with another video on the channel, and I hope you all have a fantastic day. Peace.